Hello and welcome to today's video. Now in today's video we'll take a look at what news I believe will affect the market this week. Moreover, after that we shall look at the Fin Nifty as it has its expiry tomorrow, at how option buyers and option sellers should handle this expiry of it, and then we'll take a look at Escorts and LIC Insurance. Now before we go into the video, do subscribe to the channel, and if at the end of the video if you like it, then hit the like button too. Now coming to the news front, there is not much that is going on locally. This is as we have had a busy 2 to 3 weeks on the local news front, but that has now come to an end, as this week most of the news that will affect the market will be either American or British and a bit of China. Now on the international news front, one of the key news that has been released is China's new basically data on the real estate front. Now China's new home sales data was released and it shows that there is a further drop, and I am seeing some analysts saying that real estate is not so important for China anymore. However, I believe that's a boatload of rubbish. There's real estate in any country, including China, remains a key driver of showing wealth effects, and if that is negative, then that's an issue for the economy, and I believe that will have a bit of a knock-on effect on Chinese stocks listed globally. Then on Tuesday we're expecting the US retail sales data, which will be very important, and on Wednesday the American market is closed, so that will affect our Indian market. This is the Indian market does take a lot of cues from how the American indices are doing. So I expect Wednesday and Thursday's trading session to be a bit slower due to the US holiday. And also on Wednesday UK CPI is coming. Now most British data does not affect the Indian market, but this week it will, because first we have a very quiet week, then the CPI data of UK will show that how the Eurozone is most likely going to perform. And then on Thursday we have the Bank of England interest rate decision. So it's a very heavy news week globally. However, on the local front there is no news, so we're going to be following the cues on the news front. Now coming to Fin Nifty expiry for this week. Now the Fin Nifty expiry is tomorrow, and Fin Nifty, now if you look at the video I made for Fin Nifty last week on Tuesday on its expiry, you'll see that I have not had to update the resistance levels. This is I've removed one resistance level, as I had said, between 22,350 and 22,480. That's going to stop the index from having a rise, and that has happened. As last Tuesday we made money in Finnifty expiry by selling options above 22,480, and I expect a similar pattern to be followed, as we are still holding the same resistance zone. We have still not been able to break above the 22,480 resistance I gave and go up. So how do I expect to trade Finnifty? Now the market in general has been going sideways from about 5 to 6 trading sessions, a very tight sideways range. As if you open the Nifty or you open the BANKNIFTY or any index, it has been that way. Only the mid-cap Nifty has been an outlier in that respect. So as long as we're within this range, I do not expect the Finnifty to do anything fantastic. So for any up move to really occur, the Fin Nifty will have to clear 22,480, and you'll have to clear it in a longer time frame of, let's say, hourly chart and above. Let's say 5 minute, 10 minute pop-up above 22,480 will not count, as it will just end up getting killed. This is, as we have seen this resistance. I'm going to put the last Finnifty video in the description box below, and you can check it out. It's the same resistance which I gave then, and it's still holding. So it is a very strong resistance, and it will determine how it goes. Now if we break the 22,480 resistance on the hourly chart with a bullish candle, plus the trend catcher indicator which I use also turns upwards and there is a volume build up, then we can get very strong short covering to 22,700. So what as an option buy I'm going to do on the upside, if we break 22,480 and the volume is there and the trend catcher is showing it, then I will go long for 22,700, as it can cause short covering. However, I will let basically that decision to be made by the hourly chart, not the 5 minute or 15 minute intraday chart. This is the hourly chart is what will tell us. Let's say between when we open at 9:15 and let's say by 11 we formed a good bullish candle, then we can expect a short covering. However, if we have formed the candles as we are right now and there is no support from the trend catcher primarily, then we are not going to go anywhere. So option buyer above 22,480, with that I'll go long. On the other hand, as an option buyer, if we zoom in and we let's say drop to the 15-minute chart, because on the short side it has to be played that way. On the short side now, as an option buyer, if we break 22,400, then I believe we have a short until 22,280, and that will be a fast drop. So as an option buyer tomorrow, a break above 22,480 with the right mix, as I explained before, is long. A break below 22,400 is a short until 22,280. This is as it will be a sudden drop to the bottom of the zone. 22,280 is a very important support. This is as if this gives in, then 22,150 will be reached in the blink of an eye, according to me. So this is one which I believe everyone should monitor tomorrow. The two support and resistance everyone should monitor is 22,280 and 22,480, as they are going to determine the whole game for the index. Now, what am I going to do as an option seller? As an option seller, now last week we had sold options above 22,480, even 22,350, and they made money. Now, I expect the same pattern to continue. I will basically be selling calls above 22,480, provided we don't get a bullish candle here. But all the calls which will be sold, I will keep a very tight profit stop on them. There is a fear of sudden spikes coming up. We've been within this range for too long, and that can occur for the Fin Nifty, which will be deadly. However, if we break 22,400 and go below, then I will not worry much about selling above 22,480, as even a spike will come towards it and falter. So as an option seller, if you're below 22,400, I will sell options with less fear. If you're above 22,400, then I will keep a very tight stop on my option sells on call side. Put sells, I will not look to sell to put sells as of now, mainly because of only one thing: there is a fear. I will only sell puts if we break 22,480. Otherwise, I will prefer to stay away from put sells. I believe if we cannot hold this zone for much longer, then we will have to go down. So option sells, I'll prefer calls, and I'll only sell puts if we break 22,480. If we break 22,480, then I won't sell calls. I'll only go to put sells. Now coming to the next, we'll take a look at Escorts. Now Escorts is a stock I recommended a while ago, and I read roughly 2 months ago. I'd recommended it on investing.com article. I recommended it in a video. I'd initially recommended Escorts on a YouTube video, and I had said that I am very bullish on it, and that was perfect. This is, we can see the rise we have had. This is, I had shared then that I had made an entry into the stock at 2776, and I'd even shared the proof on social media of my entry at that point. Now, after making then at the video time when I shared it on YouTube, it was trading at 3,100, and then I said that when I entered it was a risky buy. However, at this point it was a less risky buy. This is, it had built a very strong base for a big move, which I expect to come. This is, I had banked it on my big volume bar, which I had formed here, which is my own indicator. It's not going to be available into any platform if you try to look for it. So now, since we had formed this high volume bar, I expected us to have a big move up. That has come right. In 2 months, we have risen for my entry by about 55%, and for the other people's entry who entered when I shared the YouTube video, they have made roughly 38 to 40% in the whole picture. So very good profit for the people who watched the video and invested in it, and a very good profit for me so far. So why am I covering Escorts again? I believe I'm going to now put very tight profit stops on my position. I'm going to risk about 2 to 3% of the profit which I made only. This is, I believe, we are approaching candle which can, a zone which can form a candle which may be the top for now. This is as we have had a parabolic up move. So if we break Friday's high, then the zone between 4360 and 4420 is going to be very important, as it can form a top. So how will I trade it? If we basically end up reaching this zone, then I will book part of my position and then let the rest continue with a 2 to 3% profit stop. However, if we don't break Friday's high, then I will end up booking about 30 to 40% of my position anyways, and just let the rest stay with a 2 to 3% profit stop. This is, we have had a big move, and this is a zone that can be a problem for Escorts in the coming days. By chance we clear 4420, then the next target is 4600 and 4750. So that is why I'm not fully booking out and I'm keeping a trailing stop, as we can go higher, but now the climb is going to be more risky, as we can also have a sharp drop which will hurt if you're on the wrong side of it. Now the next stock we're going to look at is LIC Insurance. Now LIC Insurance, if we look at it, has been trading in a range from quite some time. It had an up move, after which it entered a range bound phase. Now how will I trade LIC Insurance? Now LIC Insurance is a stock I already hold, as I bought it the day during the time we ended up having a market collapse. It's one of the bottom fish. So if LIC Insurance manages to break 1090, then I believe it will be set for new up move. However, if it does not break 1090, then I believe this is the point where we'll end up forming a box range, and I expect the box range to encompass between 1015 and 1090. So need to trade within this range as it tries to find its way to go up. So how am I going to handle my position? I've kept about a 2% profit stop on half the position, and if that gets hit, I'll be naturally out. The rest of the position, as long as we remain above 1015, I will hold it, as if we clear 1090, then the next target is 1150 and 1240. So I am bullish on LIC Insurance, but I will want to see it first clear 1090, and in fact if it does clear 1090, then I'll most likely size up my position for 1150 as a target and 1240. Breaking this zone will be a huge break for the stock, as it will have broken a resistance that has harassed it for many months, as we have been in this range for a long time. So that is going to be how I will trade LIC. If it breaks above 1090, increase my position. If it breaks below 1015, cut my position and take my profits. So that's it for today's video. If you liked it, then hit the like button and also subscribe to the channel.